Okay, so this next video lecture is still the continuation of our Module 4 CVP analysis. So we are now in the degree of operating leverage. So when we say degree of operating leverage, this is actually a financial ratio. So this is a ratio which measures the sensitivity of a company's operating income to its sales. So this financial metric will show us a change in the company's sales will affect its operating income. Of course, we all know that operating income is coming from the sales generated by the entity. So from the sales revenue, we will deduct all the corresponding costs and expenses to get our operating income. So basically, our sales and operating income has direct relationship. So your degree of operating leverage is a financial ratio that will show this relationship. So this is also a method that is used to quantify the company's operating risk. Okay, so because this risk will be due to the structure of fixed and variable cost. Okay, as mentioned earlier, since our cost is part of the deduction, okay, from our sales revenue to get our operating income. So basically, cost plays a significant role as well. Okay, so in this case, since fixed costs do not allow the company to adjust its operating cost, because we all know that fixed cost will still continue even if the entity will not produce or they will not have their sales transaction or sales activity, still fixed cost will be incurred. So that's why this is an important consideration also to be controlled by the entity to minimize their cost. So therefore, operating risk rises with the increase in the fixed to variable cost proportion. So generally, if there is low degree of operating leverage, this will indicate that a company's variable costs are larger than its fixed cost, because in this case, if there is greater variable cost, so it will result into lower contribution margin, and contribution margin will absorb also the fixed cost, and in this case it will result into lower operating income. So this will imply that a significant increase in the company sales will not lead to a substantial increase in operating income. Why is that so? Because we all know that variable cost follows with the activity. So meaning if there is activity, variable cost will be incurred. So if there is an increase in sales, your variable cost will follow. It will increase as well. So that's why even though there is an increase in sales, still they cannot increase much, okay, their operating income, because variable costs also are increasing. So at the same time, the company does not need to cover the larger fixed cost. While if there is a high degree of operating leverage, this will reveal that the company's fixed cost exceed its variable cost. Why is that so? Because in this case, it indicates that the company can boost its operating income by increasing its sales. Because in this case, since fixed cost is greater than variable cost, so meaning there is smaller amount of variable cost that is incurred as uh, the activity is or I mean, if there is an activity, only a small portion of variable cost is being incurred. So that's why in this case, it will result into high degree of operating leverage. Okay, so in this case, if there is increase in sales, the variable cost will increase, but for a minimum amount. Then in this case, they will, or the entity can increase their operating income. So in addition, the company must be able to maintain relatively high sales to cover all of their fixed costs, so that still they will have an operating income and not will not incur any losses. Okay. So how do we solve the degree of operating leverage? So in this case, degree of operating leverage can be calculated in several different ways. So we have here the formula. So this is formula from the definition of the ratio. Okay. So DOL is equal to percentage change in our operating income divided by percentage change in sales. So basically, it's like a ratio of change of your operating income with a reference to our sales. Okay, so since the operating leverage ratio is closely related to the company's cost structure, okay, this is cost structure is this is how a company incurs their cost, maybe in terms of fixed or variable cost. Okay, so how many percent is there, or the percentage of a ratio of their fixed and variable cost. Okay, so we can calculate it using the company's contribution margin. So if you are going to use this formula, the contribution margin, or based on the contribution margin, this will be the difference between the total sales and the total variable cost. Okay, that is our contribution margin. So if that is our basis, then our formula to calculate the degree of operating leverage is CM, or contribution margin, divided by our operating income. Okay. By the way, in a contribution margin format, first line will be the sales revenue. Next will be we will deduct the variable cost. Okay, so the result will be your contribution margin. Contribution margin minus the fixed cost, that is equal to operating income. So again, this is just like a ratio of contribution margin, okay, with or in relation with the operating income. Okay, so how efficient or effective is the management, okay, in managing their fixed and variable cost. Okay, because it will show here the relationship based on the contribution margin. So finally, if there is available information about the cost structure of the company, so you can also use this formula. So degree of operating leverage is equal to Q, okay, times the difference between P and V divided by the Q multiplied by the difference between P and V, and then we will deduct their total with F. So what are these quantities, or what are these variables? So when we say variable Q, this pertains to the number of units. Okay, P variable is the price per unit, V variable is the variable cost per unit, and F variable is our fixed cost. So meaning degree of operating leverage is equal to number of units. We will multiply it with the difference between the price per unit and the variable cost per unit, or this is your contribution margin per unit. P minus V is your contribution margin per unit. We will multiply it with the number of units. So that's our numerator. For the denominator, the same also, contribution margin per unit multiplied by the number of units minus fixed cost. Okay, so meaning this formula is just like this one as well. Contribution margin divided by operating income. Okay, so this is if the information is complete as to the cost structure. Okay, but if not, then you can use this one. Contribution margin divided by operating income. It's still the same. Okay. So to understand better, we have here an illustration or example. Okay, so the management of ABC Corporation wants to determine the company's current degree of operating leverage. So the company sells 10,000 product units at an average price of 50. So the variable cost per unit is 12, while the total fixed costs are 100,000. So to compute the degree of operating leverage, so this is I think they use this formula, the third formula, since the cost structure of the entity in the information is complete. Okay, so using the formula, so contribution margin, so that is the difference between the selling price of 50 and variable cost per unit of 12. This is multiplied to the number of units of 10,000. Okay, divided by the same amount. Okay, and then we will deduct it with 100, which is fixed cost. So the resulting degree of operating leverage is 1.38. So what does this mean? How do we interpret this result? So in this case, the degree of operating leverage indicates that for every 1% change in the company's sales, will change the company's operating income by 1.38. Okay, meaning again, if there is a change of 1% of the company's sales, the effect of that is their operating income will also change by 1.38%. And since this is, or this, the result is a positive number or positive figure, so meaning it indicates an increase. Okay, or probably, for example, in other words, change, I mean, maybe decrease or increase. So if the entity will be able to increase their sales by 1%, then it will follow that their operating income will also increase by 1.38%. But if their sales decrease by 1%, then their operating income will also decrease by 1.38%. So that's how we will use your degree of operating leverage in analysis. Okay. So those are for our degree of operating leverage.